Hello everyone, this is going to be a lecture on time and price for Model 1001, creating the New York Session Time Model Series. Model 1001 is the subsequent model after 110. This model specifically is the distribution model of the New York Session. So we get that larger expansion move in some occasions to complete certain cycles. If there is a cycle of 369, for example, you will get a large distribution. If there's a cycle of 197, you will get a large distribution as well. Model 1001 in binary code translates to 9 in decimal conversion. And the reason for that is because of the dynamic that we've spoken about in previous videos, which is the dynamic of 369. And because of that, we can begin to see whether certain intervals or cycles are going to be time distortion, depending on the volatility beforehand, or if they're going to be large expansions. As the circle of 9 expands throughout any session, so does the session time intervals of these time models. It's the reasoning as to why this model specifically is from 1235 to 1409. It's a bit more larger in length compared to other time models for that reasoning. And we can go through many examples to show us that for the portrayal of that, the large expansion, the large distribution that begins with this type of model. So it begins from 1235 and ends at 1409, but the inner intervals, it has 4 in this case. The end of New York lunch, 13, 1320, 1330 is an outlier, but it's still there, and 1340. The roots are 1202, 1235, and 1330. 1330 is also used for model 111, but I will show the discrepancies and how to utilize it and what to look for in many examples. So because of that, there's an outlier, which is the 1330, not just the root candle, but the actual time of it. Model 1001 is more likely to occur if model 11 is in effect from earlier in the day. Because usually model 1001 will complete that cycle that it's going through. So if model 11 took effect and there was a, let's say, significant move down, as we talked about in previous lectures, model 110 is just going to be used for continuation in most cases, right? So what does that mean for model 1001? The model after 110. That would mean that we get a large possible reversal or time distortion and chop. Thereafter, we can seek a move ending or beginning at 1409. Beginning at 1409. So we must use also the 15-minute chart, and we'll go through examples of that. But that's essentially the high probability case is if model 11 occurs, then we can expect model 110. So, I mean model 1001. So let us go through a couple examples to portray that. Here we have all the models taking place throughout the day. And model 1001 is located within this vicinity right here, between 1235 to 1409. You can already see from what I've highlighted, just based off this New York session here on a Monday morning, that there's a large distribution towards buy side, specifically back to model 11 root candle 1034. But as I previously stated in the lecture, what happens here? Judas builds up the sell side as we talked about in previous lectures. Look for a higher time frame PD array, so there's probably a 15-minute CB. Then model 11 takes place here, right? So what is model 110 used for? continuation above the root candles, down, distributing down. And now we are in model 1001 territory. So 3, 6 was used for continuation, as I talked about. Then here we can see a completion of the cycle, 3, 6, 9, and a reversal. Occasionally, you will see model 1001 be used for time distortion. How do you know what's the case if that were to happen? Is when you begin to not see movement after New York lunch ends, which is 1 p.m. New York, right here. Notice in this example a couple of notations here. Where is the 1235 candle opening price? Right here, right? Beginning of the cycle. Anywhere below that is discount. We are seeking buy side now because look at this equal high right here. So there's probably a high probability for buy side, right? So anywhere down here, we're going to want a long. Also, pay attention to the 1202, which is located up here. You see how price is messing around with that liquidity level as well. So at the end of New York lunch, price begins to displace towards buy side. At 1330, we're going to want to see a couple things between 1330 and 1340. We're going to want to see that price holds above the root candle, 1235. Look at the opening price. So right here, you could see how market makers are buying there specifically. They're not closing with the body below it. They're just wicking down, grabbing more liquidity. People shorting here are going to get duped. And then what happens at 1340? One of the inner intervals that we talked about for this model. We begin to see that large expansion back to this specific liquidity level, the 1034 candle. So a couple of techniques here could be utilized. We can use a standard deviation for target. You can take profit at the -2 right here. If it closes above and you want to anticipate further into buy side, then what are you going to look for? You're going to look for that it holds above the 1235 candle, which it does. At that point, you can expect a possible move to -4. So this is one example of 369. 3 was used for reversal, 6 was for continuation, 9 to complete the cycle, and to reverse, right? Let's look at another example. Here we have a day on a Thursday, right? Let's dissect this now. But before I begin dissecting this area here, let's talk about that distribution. This is one of the largest moves that can occur for a stock, the distribution model. You see, compared to this area over here, what's the larger move? Model 1001, correct? But a couple things to note here. A high probability Model 1001 will have two aspects. It will have engineered liquidity throughout the day, and it will begin to see volatility increase slightly after 1235. Otherwise, it's going to continue to chop until Model 111. But at times, you do see this engineered liquidity being built up, and Model 1001 takes precedent. Now, if we were to dissect this slightly, it was a pretty choppy day here for Apple on Thursday, February 22nd, right? We get that move for Judas, goes in a premium, you can short it there, pretty small move. Then it goes into Model 11, sort above the 1034, pretty small move, goes back to yesterday's 1121 candle. Then we see Model 110 just be time distortion right here. See that? At that point, we're then expecting, and we should expect, a large distribution here. And if not, then model 111 without a doubt at that point makes this model over here, which will be the next lecture, even more higher probability. But we can first expect model 1001, and this is a perfect example of it. Look at all this engineered buy side. This should be piquing your interest whenever you see this occur. Whenever there's no expansion throughout this area over here, we can then expect model 1001 to take precedent. Again, a couple things to note. 1235 opening price gives you discount right there. 1202, where is that located? Way down here. It's being utilized down here, but price never goes further into that area. So how would you know not to wait for that? If you start to see bearish PD rates because we're looking for buy side be disrespected. You see a little bit of displacement here, but look at this. There's a SIBI here on the 1 minute. It starts to get disrespected. And then what happens here? Price closes above the 1235. Then what happens here? Price closes above the 953 on this large displacement move here. So what does that tell you? It tells you that you're going to see continuation until at least the end of New York lunch, 1 p.m. Thereafter, you're going to want to see continuation until 1320. And look what happens at 1320. Consolidation until 1340. Once 1340 hits, you see continuation thereafter. So whenever you see a day like this, right, it's just a larger version of Judas. We talked about this in Judas. When you see engineering liquidity, you're going to want a long, right? It's just a more expansion of that, a more expansive move of that engineering liquidity for Judas. That's essentially all it is. Let's go through another example now. So here we see 139 take place, right? You see Judas take place here, leaving what? Equal lows. That could be a point of interest later on. Then we see model 11, 3. What is model 110 used for? Time distortion. Then what can we expect from model 1001? The distribution model. You can expect volatility to be injected again thereafter. You see that now. Model 110 right here, model 1001, and model 11 over here. So we see a reversal, 1, Judas, 3, reversal here, and then 9. Again, it's the same story. Opening price goes into premium, gives you a chance to short here. Why? Relative equal lows here, equal lows over here, engineered sell side. It's a pretty good risk to reward for shorting. 1202 candle. Same thing. Opening price down here. You see how price is playing around with that liquidity level? Gives you another chance to short here. And then 1330 will measure that as well. Price goes to that opening the next day, 1330, as well as at 1034. But just quick notation here. I mean, it's pretty clear cut. There's equal lows here. There's equal lows here. And the cycle just repeats. It's 1, 3, time distortion, 9. Right? Just as we saw the other one, model 110 is being used for continuation or time distortion. It's the same scenario, same routine. Now here we see a scenario of engineering liquidity towards sell side, and then we see distribution exactly at 1320, one of the intervals of this model, model 1001. Or to highlight it, they become a bit more clear, right? Now, what does price go back to? The 1034 candle, which is located down here. That could be a potential target. But if you were to just use a standard deviation off that manipulation, then we could target -4. But what happened here? What's going on? Again, 3, 6 is used for continuation. See that, right? And then 9, distribution. Equal lows, again, right here, relative equal lows. Engineered sell side, manipulation to a high, starts disrespecting bullish PD arrays, above premium of the 1235 root candle, as well as the 1202 root candle over here. Now I'm going to turn off the indicator just to clean things up and let you know what Model 1001 looks like without all this clutter. 1235, 1409. 1235, opening price, above, premium. 1202, opening price, within the same vicinity as 1235 in this case. 1230, opening price, it's in the same area. So all in all, we're just looking for anywhere above that area to short. And if we were to observe the 5-minute time frame as well, then we can see how that also meshes together. We can use any PD arrays on the 5-minute as well for entries. So any bearish PD arrays. Here we got a clear busy inversion on the 5-minute, close below. Price reprices back to the equilibrium of that. And we could try a short there. Or we can simply use the order block that's located here as well, above the 1235. We can short there as well. There are many opportunities to short, right? Now, what these time models present is the timing of it, as well as premium and discount of root candles. But you can use other time frames to enter longs and shorts. So the timing, if you were to expect downside, at the latest, you'll want to see it at 1320. 1320 or 1330, you're going to want to see volatility increase. In this case, 1320, you can see price displacing back down to what? The root candle of the inner interval. As we mentioned in previous videos, also pay attention to the 953, as that's used throughout the whole session. So that could be used as a target as well. Above is premium, below is discount. Now, the reasoning as to why this is one of my favorite models to trade is because of the large possible expansions you get for this specific model. This specific model, 1001, presents large moves compared to other models. Large distribution moves when it does occur. And it has the best case scenario when there is a non-volatile session before it. So non-volatile intervals before it. When price is just creating engineer liquidity throughout the entire session, and then it takes it out in one singular move, a large distribution. Take this for example. If we were to dissect it, there is a large sell side there. This is a pretty clear manipulation up here, right? right here. But this area up here is model 110. Now what happens in 1235? A little bit of time distortion, chop, right? Now when do we want to see volatility be injected? Between 13 and 1320. You see that right there? A perfect move right there. It's no coincidence. And then we want to see a possible terminus at 1409. Best case scenario is it just continues on for the rest of the day. But this right here is your model 1001. This area right here, above the 1235, is where you're going to want to short the opening price. Look at that beautiful opportunity it gives you. Engineered sell side down here. With a clear manipulation up here. Gives you a pristine and clean, perfect opportunity to short above that root candle. Global 2, pay attention to that as well. Opening price. Notice it is wicking above. It is not closing above that. What does that tell you? The price wants to head to sell side. 953 as well. Pay attention to that. Opening price. See how price gives you an opportunity to short there as well. Continue towards this sell side right here. So this model is one of my favorites because if price has a pretty slow day, right, and it's just engineer liquidity, then it gives you the right opportunity according to price. Time will tell you when that large distribution move will begin. This move right here. Take out all this liquidity built throughout the day. It's the reason why it's called the distribution model in the book. Because it distributes whether towards buy side or sell side and takes out a lot of liquidity throughout the day. If you were to combine this with weekly session time models, you can begin to see price in a different manner. So if I were to go on the 1 hour here, $9.30 to $9.30 the next week. Let me erase this momentarily. So here we have Icarus, right? This is what's taking place. You draw the inner intervals. And notice what's happening here. Right over here. Between this inner interval of the 0.1125 and the 0.36 on the circle of 9 pips for Icarus. This is your opening price, if you go to the 5-minute, of Icarus, 1030. Right? So we're on the 5-minute chart now. Those that are watching this part of the lecture, you'll see how there's time confluences between weekly session time models and New York session time models. So if price is bearish, you can expect volatility to be injected at certain times for weekly session time models, right? 1350, you want to see continuation. And time and price is fractal. You see that right there. Price decides to go back towards bias at that specific moment. Little nugget I'm leaving there in this lecture, but excuse me, I'm a little sick. But notice how we're using Icarus now, the root candle, and go to the 1-minute chart now, the New York session. Model 1001. You see how both can be utilized here? If we understand that we're in premium for Icarus, we can then look to the more granular aspect of this and use Model 1001, because we saw engineer liquidity throughout the day, then we can look at 1235 opening price, sort above here, and we're expecting volatility at 1320, right? Or 13 for Model 1001. There it is. Use that combination with weekly session time models, and you have a higher probability trade. Same goes for the other models, for all weekly session time models. But as I mentioned, this is a large distribution model, so you can expect large moves when this does occur. This is the classic Judas that we talked about. Engineered buy side moves up to what? Model 6, then Model 9 is used for continuation, and a drop to that. So if you're looking for larger moves and you're an option trader, browse stocks that meet these conditions. Or if you're a futures or forex trader, then simply just wait for the exact moment that this time occurs. And at that point, you can either say no, it doesn't meet the right criteria, and I'm gonna move on and come back the next day. Or you say this looks like a perfect opportunity, and I'm gonna try to take a stab at it. And occasionally you can capture large distribution moves if you use weekly session time models and New York session time models in conjunction with each other to create even higher probability scenarios where you include both macro and micro aspects of time. I hope this video was insightful. Next lecture will be about model 111, but just keep in mind for this specific model, it is a distribution model, right? So not necessarily a market maker model, as we could see that took place for model 110 here, as we talked about in a previous lecture. In most cases, this is the market maker model, but model 1001 is the distribution model, the larger move occasionally. Hope this video was insightful, and until next time, God bless.